is it really the broker's fault, or is it the market cycle that we're just in, right? So even if you took the broker out of the equation, you'd have all of these different trucks really competing for the same loads and your rates would still deplete, right? The broker doesn't take any of that money away.
Welcome to Over the Road. I'm Eli and I'm joined today by Crystal. Crystal is a Vice President of Corporate Sales at ATS Logistics, the freight brokerage wing of Anderson Trucking Service. And today we are here to tackle a topic that sparked some debate in the trucking industry over the past year or so in this market of kind of depressed spot rates.
Well, we're going to address some perspectives on how freight brokers impact truckers' pay and some of the risk that a trucker may run into by using a broker. The rate is driven by the demand and capacity, right? So rate is based on, are there trucks available and are there excess trucks available? And if there are, then typically the rate is decreased, right? Based on what a driver is willing to move it for. So regardless if there's a broker in the equation, the rate is still going to fluctuate based on that market demand. Now I think with the driver, the concern is really like, would I get more money if that load was just given to me? And the answer is maybe yes, but a lot of times the trucking companies, those mid to small size trucking companies that are very dependent on a broker, don't have the capacity or resources or infrastructure in their organizations to really be able to get access to the breadth of the freight opportunities without going through a broker.
Yeah, because maybe they're looking at like a load board or something and they're seeing like the cents per mile is like $2, less than $2 per mile. And they're like, well, that's just because you're taking all the money.
In a market where it's more advantageous for the trucking companies or the brokers, right, where there's less capacity and more freight, right? In that market cycle, a broker's margins may increase a bit, as does the profitability of the trucking companies. But in a different cycle, in a down cycle, the margins of a broker compress alongside of the margins of the trucking company. The market swings are very similar for a broker as they are for a trucking company. So they're not making any more money on you in this environment than they are in the other environment.
I was looking it up and according to the FMCSA operational authority data, there's 29,000 brokers in the United States.
That has increased dramatically.
I remember we were saying 17,000 for a while.
Yeah.
So it's gone up a lot. So if you think about, maybe a broker that wouldn't be as reputable or trustworthy, it would be, that person who's just kind of jumped into the industry, at the peaks of 2021, trying to kind of, garner some of those those higher prices.
Yeah.
How can a trucking company avoid working with those kinds of brokers? Because a lot of that is like they are posting freight on, widely accessible load boards is essentially what's happening.
Yeah. I think doing due diligence when you work with a broker. So if you find a load on a load board and you haven't worked with a broker before, it is, again, like you said, checking their authority, asking them how long they've been in business, understanding the model of their brokerage, because depending on how they're structured, they are incented differently. So if it is a one-man show who is booking the freight and then booking the truck, they're probably going to be incentivized very different than a split model brokerage. So really understanding those things and then building relationships with brokers who have customers in the lanes that you really need to run, right? Whether they're your back hauls or your head hauls or whatever it is, but building the relationships with the brokers who have access to those lanes will help you build a credible bank of brokers for you to do business with. It will put you less at risk of working with a broker here and a broker there and not necessarily knowing anybody, because a really good broker could give you consistency in some lanes that you need or some holes in your network.
Sure. What risks are associated with getting involved with a broker that has been around a shorter amount of time, maybe doesn't have as much of a reputation in the industry or experience?
So as you kind of mentioned a little bit earlier, we saw a big spike in brokerages that were added over the last few years, and typically we see that in a market where there's more freight than capacity, right? It's a good market for both drivers and for brokerage, so you see a spike in these starts. And what happens is when you get bad actors in the brokerage space, we see an increase in double brokering. So they might actually be the original broker of the load, which could create issues in your communication. It could be issues in your pay. It could be a lot of different negative things that could happen to you as if you book a load with them.
Yeah.
Another thing that we see happen or rise when we see more people enter the space is that some of those brokers may actually be illegitimate, right? They could be thieves, right? Bad actors who give you a load and have you deliver it somewhere, but they never actually had the freight. They actually took the load. Cargo theft is and can be an issue, and you could be a non-participant in that if we don't do our due diligence in the front end of who we do business with.
Sure. Are there advantages to working directly with a brokerage like that as opposed to working off of like a bigger load board that's drawing from a bunch of different brokers? An example I would think of is like if you were to work with ATS Logistics and using brokeredloads.com or ATS Freight Match as opposed to truckstop.com or DAT.
Yeah, I think there's different instances where working on a digital board is better than maybe calling out and being more relationship based, right? It depends on the time, it depends on the resources, and it depends on, again, maybe the consistency, right? So if you just need a load and you're never going to need this lane again, maybe you hop on a board and you pre-plan out ahead and you get things done, right? You see a rate that's good, you actually wouldn't have to engage with anybody, which creates a really streamlined process. On the flip side, if you're trying to build density and relationships in certain areas, I think picking up the phone and getting to know people and getting to know their business and their customer base can really help you fill some of those holes.
Thanks for joining us today. Please drop a comment below if you have anything to say on this riveting topic. And check out the Learning Center in the description below on driveforats.com, and I'll see you in the next one.